Wait, right there. Before you tour a single house, you need this checklist. Or you can waste weeks and maybe even thousands of dollars. Shopping for your first home can be overwhelming, but don't worry about it because my guest and I are going to give you a simple 6-step checklist to get you started. But before you do, hit that like and subscribe button. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you can only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the bank of the community. Hi, I'm your host, Margaret Paddock, the director of the private bank here at National Bank of Arizona. And thank you for joining us today. Today, I have a new guest to the show. Greg Berg is the area manager and mortgage manager for National Bank of Arizona. Welcome to the show, Greg.
Thank you very much, Margaret. Glad to be here.
We are not professional podcasters, but we are professional bankers. And our goal is to give our viewers insights that you can only get from a friend in the business.
Well, the last time I was in front of a camera, I was a teenager, so this should be interesting.
Great, let's get started. Today, we give first-time homeowners a checklist. But first, let's talk about the market. It's been challenging for the past several years, especially for those first-time home buyers.
You know, Margaret, the last few years have been really interesting. You go back to the COVID years, interest rates were at an all-time low. Interest rates have probably increased faster than they have in the history of mortgages. But it's getting used to the new paradigm and understanding where rates are, where home prices are. And the key is for that first-time home buyer to really get educated so they can make an informed decision.
Speaking of that, what are the 6 critical steps that everybody needs to know when they're looking at purchasing their home?
Well, when I think about those critical steps you mentioned, there are 4 that we call the 4 C's of mortgage. And along with assembling your team of experts to support you in the endeavor, along with securely and safely closing on your mortgage and your new home. You know, those 4 C's are going to be collateral, which will be the subject property you're going to be purchasing.
Right.
It'll be your capacity, your ability to repay, your credit, that's your credit worthiness, what's your history of payment, what's your credit score, and also capital. The assets required for you to complete the transaction.
Okay. So those are all important. Why don't we dive into each one of those just a little bit to give our viewers a little bit more color on them?
Okay. So specifically, when you're thinking about collateral, that's the home that you're looking to purchase. And that is going to have an appraisal, typically, where a professional will go out, they'll assess the home value. They will also look at the quality of construction and health and safety issues that could come into play. It will also, based upon that value, determine the acceptable loan amount that a lender will allow you to go and try to finance to purchase the property. The next you're going to talk about is going to be, when you talk about capacity, that's going to be what is your ability to repay that loan?
Very important, obviously.
Obviously, they're going to look at your income. They're going to look at how long you've had that income and how long do you foresee having that income.
Okay.
In addition to that, then the credit, which is a truly important piece. The stronger your credit, the more qualified a lender is going to look at you. It can, in many cases, impact the interest rate that you're going to receive. And it's one of those that your neighbor across the street could purchase the same home you purchase for the exact same price with the exact same down payment. And if one has excellent credit and one has fair credit, but both can qualify, the payment each month could be several hundreds of dollars in difference based upon having a strong credit history.
Okay. So that's obviously then a very important piece.
Extremely important piece. And then the final piece is the capital. What assets do you have? Those are going to be checking, savings, money market, could be a retirement account, could be gifts from a parent or a close relative. There are a number of ways to get to that. And the amount of assets will depend on the type of mortgage loan that someone is looking to secure. Because many people, still believe the myth that you need 20% down payment
Right.
to qualify for a loan, and that is absolutely not the case.
Okay.
There are loans, for instance, for veterans that can be a zero down payment. There are many other loans out there where you can maybe get some down payment assistance through some federal programs, even some state programs.
Okay.
But you can get into home anywhere, like I said, 0 to 3 to 3.5 on up in terms of a down payment.
So, Greg, you covered the 4 C's. What were the last 2 points that we need to make our viewers aware of?
Okay, the fifth important part is to assemble your team and get pre-approved. And the final step in the process is to close safely.
We're all aware of how high the prices are here in Arizona, and home ownership seems to be, or feels like, it could be out of reach, especially for those millennials out there. And interest rates are still relatively high from a historical perspective. Tell me a little bit about the opportunity for those millennials and others that are trying to land their first home.
So, Margaret, before I get into that, one thing I want to explain is mortgage interest rates are not at a historical high level. As a matter of fact, you go back into the 80s, people were purchasing homes paying 14, 15% interest rates. And I recall when I purchased my first home, I was ecstatic because I was able to get below 10% and at a
Ouch.
9.875% interest rate.
Well, you're right from a historical perspective that interest rates aren't necessarily all that high, but the home prices in Arizona are so elevated and have been, and they seemingly keep going up.
As it relates to supply and demand, with the positive population growth, more industry coming in, more jobs being created, the inventory for homes on the resale market is lower than it's been in several years. While there's been a minimal improvement, it hasn't been significant enough. So with that low supply, that's driving prices up, because what happened was when rates were lower, people were acquiring these homes. Now, and they were more prone to selling those homes and moving up because rates were low. Now, as prices have increased, as rates have increased, people aren't selling homes as quickly, and we're not able to build enough new homes fast enough to satisfy the demand in the market. Therefore, again, the supply and demand, prices are going up in the desirable neighborhoods. But if, as a borrower, you can qualify for a home, it's a home that you want, I would recommend you make the purchase, because everyone is indicating that interest rates will come down somewhat sometime in the future. We don't know when, but when that happens, you can refinance your home and lower your monthly payment.
Well, that's good news for first-time home buyers. But there were also something that you mentioned earlier about programs and taking advantage of opportunities, whether it's assistance with first-time home buying or low down payment requirements. We at National Bank of Arizona have a gold checking account where we are offering up to $1,000 to help with closing costs just by having this checking account. So I think if you are able to take a look at all of the opportunities and which one of them will work for your situation, it could be very beneficial.
That's absolutely accurate. For instance, when you look at the gold checking account the National Bank of Arizona has, that allows you, again, up to $1,000 off your closing costs. It's just opening that type of account. You will get that benefit. Also, there are mortgage programs out there for first-time home buyers that may qualify for some closing cost assistance. And that can be anywhere from $1,000 to a few $1,000s. You start adding those together, and you can offset a large portion of your closing cost. And you may also be able to get some seller concessions to offset that. So you can save several thousands of dollars that you would not have to come out of pocket with by getting informed and educated on what resources are out there for you.
And so for those of you that are interested, go to the link in the description to find out more about the Gold checking account and all of the potential rate discounts and fee discounts that are available to you. That's why it's so important to work with a knowledgeable professional that's here in the market.
Margaret, I couldn't agree more. You want someone that will answer your questions, who is knowledgeable about the products that they have and even products they do not have, so that you can make an informed decision.
Well, Greg, it sounds like there's hope for those millennials out there. I know both of my children are millennials. One is still looking for that first-time home. But it does sound like in the future, there could be some opportunities to work with a mortgage professional, find out about all the programs, all of the options, all of the ways to save on closing costs and fees and interest rates. And obviously, knowledge is power, right? So as long as you are educating yourself on all of the options, it sounds like there is a path forward for a first-time home buyer.
Margaret, there absolutely is a path forward for first-time homebuyers, which reminds me, my youngest daughter, who's now a professor at a major university, and she took the job about 2.5 years ago. And when she got her contract, I was like, you might want to think about purchasing a home. And she looked at me and she said, you must be out of your mind. She then looked at the rent prices where she was going and she said, you mentioned about buying a home. What are you talking about? Because the rents are pretty high. So finally we sat down, I explained to her what she could qualify for, and she purchased her first home. She thought it was unattainable.
Out of reach.
Where it absolutely was not. And now I look like I know what I'm talking about with her.
Finally. So you had mentioned qualifying for a first-time home buyer. What is the debt-to-income ratio that we hear about all the time that is kind of standard?
There actually are various schools of thought about the debt-to-income ratio.
Okay.
One of the primary schools of thought is that for your home, that's going to be the principal, interest, property taxes, homeowners insurance, and homeowners association fees if they apply. That number is around 38% of your gross income.
Okay.
There are loan programs that will allow that number to go up higher depending on factors such as your credit score, the loan program, the amount of down payment. But you have programs that generally in the high 30s to low 40s for the debt-to-income ratio. Now, lenders will look at two factors. They'll look at the debt-to-income for your mortgage plus any other liabilities that you'll have, such as an auto loan or auto lease, credit card payments, what is the monthly payment, student loan payment, other installment payments. And that number is generally somewhere in the low 40s and can go up in some cases up to the 50% range of your gross income.
And that's the number that would determine what you pre-qualify for.
That is accurate.
From that letter. But then you had mentioned too that just because that's what you qualify for doesn't necessarily mean that's the number you want to be focused on, because if you're up to almost 50%, that's going to be tough doing things like going to the movies and going out to eat, and it's gonna make for some tough choices.
You're absolutely right. Yeah, the higher that debt to income ratio, the less disposable income you'll have after you make your mortgage payment. And anyone you work with, they should give you the facts, and then you have to be self-aware in terms of what's your comfort level in terms of payment every month, because it's going to happen every month like clockwork. And the key is you don't want to be, as they say, well, I have this home, but I can't do anything else. And we really want sustainable home ownership where you can live happily and make your payments.
Greg, thank you so much for joining us today. You have so much knowledge and information that can really help all of our customers here at National Bank of Arizona and customers that are not yet banking with National Bank of Arizona.
Margaret, thank you. Appreciate having the opportunity to spend some time and talk about mortgages and the opportunities out there for first-time home buyers. And if anyone is looking for a mortgage, wants to just get educated on the entire process or purchase a home, please reach out to one of the qualified mortgage loan officers here at National Bank of Arizona.
Thanks for watching. That's it for today. Check out more episodes from your favorite podcasting platform or watch us on YouTube.